Welcome to Keiretsu Forum Presents. My name is Randy Williams. I'm founder and CEO of Keiretsu Forum, also general partner at Keiretsu Capital, a family of funds that we've created over the years. They're topping off our best deal flow around the world. We're celebrating our 20th year at Keiretsu Forum, and to my left is what we do. We obviously fund companies. We have 1,400 fundings over the last 20 years. But we're talking about something that's going to be very exciting today, which is due diligence. Now, why is it exciting? Because entrepreneurs are listening and watching, and also investors. We have to create a win-win. In fact, that's our topic today, how to create a win-win between both parties. So entrepreneurs win with obviously a successful liquid event, but investors win also. And I have two experts that are going to introduce themselves, but they're both Keiretsu Forum members. I'm very proud to have Elizabeth and Michael on the show. Elizabeth, let's start with you.
So, Randy, I have to say I was surprised that I was chosen to speak on this topic. Everybody knows I have a very strong opinion about it. And after my first year in Keiretsu, I decided to jump in and lead a due diligence event for a young company called Tutorfly. I probably have done this 100 times for sure. But my background is extremely varied. I've been on the entrepreneur side, I've been on the investing side, I've done private equity. I've got a ton of experience, and the thing I would say is that if I can't share that experience in a really supportive way to a young entrepreneur, I'd rather not do it. I think that entrepreneurs need all the support they can get because the road they've chosen is a really tough one.
Yes. And Elizabeth, before we introduce Michael, I'm very proud that you vetted us and did due diligence on us for 2 years and just joined us last year. And thank you so much for taking the leadership on Tutorfly. Heard so many great things about it, and hopefully we'll lead that to a successful conclusion. And one thing I want to say about due diligence, yes, we do it early, but we should do it in the middle. We should do it later. We always want to support with company with resources, but continue doing due diligence, making sure they're staying on the path. Michael.
Hi. Well, I'm smiling at this because we're trying to have this be a fun process, and due diligence can be perceived as anything but fun. You're
like going to the dentist,
right? Like going to the dentist. My background is similar to Elizabeth's. I've been both on the investor side and the entrepreneur side, executive side, particularly early in high growth companies, and the thing that people talk to me about, about me, which leads into how I ended up really drafted to create the processes we use, is that people tell me I'm sort of gifted in taking complex subjects and cutting through them, and dealing with visionary entrepreneurs and executives and linking them with operational reality in such a way that things are more likely to succeed. And I've been proud to be a member since 2002. So we're going on, I think, 17 and a half years.
And a shout out to Michael. He was the author, along with many other members, creating Keiretsu Forum Due Diligence Booklet, which is free at Apple stores, or go onto our website. And it's over 400 pages, how we think, our DNA, and how we do due diligence. And you authored that. We probably need to go Vision 3.0, right?
It was designed to last, and this is going to be an interesting dialogue because we're dealing with how I and several of us designed this process to work, and how somebody that's a new member came in and used the process. So I'm looking forward to this interaction. But I think it was designed to last. And what's important about this process and how it came to be is that generally you think of a due diligence process and resource as a checklist. And when we got together to create this, it wasn't just to be a checklist. It was to be a process that could be both backward-looking and forward predictive-looking, that was a clear process to take advantage of the mind share of members and our knowledge base, as well as, to be as predictive in nature as possible.
Mike, I can tell you didn't leave anything out of that booklet.
Yes. Well, I tell all Keiretsu Forum members and friends, there's a lot of joy in participating, whether, athletically, play golf, or if you want to go to the opera, participate. Same thing at Keiretsu Forum. Obviously participate by writing a check, but be very careful. We ask you to be very careful. We don't take warrants or commissions when you invest. 100% of your dollars flows to entrepreneur. But Elizabeth, did you have a joy of participating this time? Because you've done it over and over. Was it this time any different? with
Well, I
Tutor
was
Fly?
really happy that everyone else that signed up for due diligence said, yes, you can lead. And then I did. So I've done a lot of diligence on companies, both from having to deal with the venture community's difficult entrepreneurs. I had a firm that ultimately I sold to WPP Weinar that just dealt with struggling companies, trying to figure out where they were in the business idea and concept and how to move them forward. And I actually took that show on the road. I did keynotes for Microsoft for their Global Partners Conference, IBM, Toshiba, Sun, a lot of companies in the late 90s and early 2000s. So, you know, I was used to talking about this, but I also was used to doing it and the really hard work of digging in. I also got paid to do it then, which this is a volunteer job, by the way. If anyone wants to understand what you're doing, this is a real job that you're volunteering for, and if you don't enjoy it, you shouldn't volunteer because it's there's a lot of work to it, right?
And I sincerely appreciate all the members in the last 19 years, moving on our 20th year, that have given of their heart and their mind. I call it Swarm Intelligence, for these great due diligence booklets are created. And so how big was your booklet that you created for Tutor Fly?
We're at close to 80 pages right now. The person who volunteered for the legal component is tied up in a pre-trial briefing. So he's probably going to add, I would say, a few pages, not a lot. We did, for sure, all of us had a minimum 50 hours each into this.
Unbelievable.
So,
do I thank you now or later, or, you know?
there's going to be wine involved, trust me.
Exactly.
I want to jump in here before we scare off members.
Exactly.
So Elizabeth and I just really met and spoke for the first time last night. And when she said the amount of time that was put into that due diligence, I was taken aback. Because when we designed this process, the idea was to make it easy for members. Right. And to say, well, okay, we're going to divide our time up, and so it shouldn't be a job. And as I heard, and as I look back on the length of time in which I've been a member and seen how much time our members put into due diligence, and now seen as these reports become a tool for entrepreneurs to syndicate, I really hope entrepreneurs appreciate the value that they get when these people come in and put this level of time in.
Two things come from, to your point. One, we want to share our due diligence, whether it be VCs or other investors. And one thing powerful about our due diligence Keiretsu Forum, no one has a vested interest. So when Elizabeth, Michael, or the team that you assemble, and we got to do a shout out to them, when we do due diligence, we're giving knowledge, but we're not asking you to invest. We're not soliciting. We're sharing knowledge to, obviously, our community of investors. And that's a tough one too, because you want to say, gee, this is a great deal, but you can't do that. So tell us how that works.
So what you really have to do when you go into this is so generally something connects for you, right? So you've got, we have the process of vetting companies. So they get their first tryout, and then they go to the Shark Tank event, and then they usually come back again. And in there, someone has to emerge that says, yes, I'll do diligence on this company. That's usually a strong indication that they'd like to invest. But you're absolutely right, because I did look into this. You cannot put on paper that you're recommending an investment if you're not officially a partnership or some sort of corporate entity. So in bringing forth the facts, you want to bring them forth in a way that both demonstrates the value of the company, but actually achieves sort of the informational needs that any type of investor might want to look at. And I sort of look at it from a past professional role of having to do this. We were lucky enough that our team were really attuned to their roles and all had, a high degree of self-worth in that work they'd done before, had set a lot of benchmarks, and we wanted to do the same thing this time. One of the things I required of the team, though, especially once they said, here, take the reins, was I wanted us to meet together with the company and all of us equally understand where the company was and what they knew about the marketplace they were entering. Every entrepreneur is, by definition, a subject matter expert, and I've been saying that since I started doing keynotes in '97. Whether or not they know enough about a market or a segment to be a big company is a different question. The reason they're an entrepreneur is because something's been bothering them for a long time. They've worked on it mentally, and now they're going to
Yeah.
try and go fix it. It doesn't matter whether they're sitting at a desk at a tech company or they're the guy that hates the way the crosswalks works at a particular, stoplight or something. So, so those are sorts of things that stimulate people to be entrepreneurs. And you have to determine for yourself what makes them investable. So if all the information's in one place and it looks thorough and compelling, then as long as you haven't written anything persuasively, you usually can make a good decision from that content.
Okay, great. And before you chime in, I want to tell entrepreneurs that are tuning into this is that don't be afraid of this process. Probably the best thing for you to do is be prepared. If you can bring us, obviously, your due diligence, and we will embellish and or put our own comments on that. On there, that's really important. But don't come, with nothing, because then we may not have the interest of really helping you because you haven't helped yourself. What's the famous line? Tom Cruise, help me help you. So make sure you bring enough information so we can cobble together on our end. Obviously, things are interested in us. Speaking of that, what are we interested in as investors, Michael?
Wins. Well, we're going to talk about win-wins. The thing about Keiretsu Forum is it's in a way it's a matchmaking service. The membership has gotten so big and so diverse that any entrepreneur can come in, and if they go through the process, then they will find the right matches. So it's not what we're interested in, it's the diversity of what all our members are interested in. If I could backtrack a moment, though, this process was designed, because you were mentioning this, to be for entrepreneurs too. The handbook from an investor's perspective, so it's, first of all, for people that don't know where to get it, Keiretsu Forum, go to the investor section, due diligence tab, and that will, of the KeiretsuForum.com website.
Or Apple Store.
Or Apple Store. It's designed as a process with resources added on and with additional information added on. And entrepreneurs can and should reverse engineer this. If you're an entrepreneur and executive raising capital, this is how we think as investors. This is a process we're going to go through. Use it and come in prepared, and you're going to get more value.
So as a new member this last year, Elizabeth, did you have that as a benchmark? Because you've done it yourself corporately. You've got paid to do it. As you said, keynoting in the 90s on due diligence. Did you use any of this material that's been created the last 14 years?
What it did is it really served to help me organize the team, right? So the sections were well defined. The information we were looking for was pretty well defined. There's a lot in there that is totally, not applicable to any particular company, but it's all in there if that company happens to be one that, it has a particular type of contract that you have to vet. So it was definitely helpful in organizing the crew. I think what I did is I used that as a reference point to have us all come together. So I think, mentioned this a few times. We met together as a team first. We met together with the entrepreneur and all of the founders, all of the employees, and had them basically spill their guts in a very structured way. So we understood what they knew. That was crucial. So then we all knew sort of more about what was missing from our points of view. We exchanged that information between us. And then we all went into the appropriate directions that we'd chosen to address, and then came back again with their team and said, well, this is what we know now. What about this? What about that? We asked them, hundreds of questions to the point where the entrepreneur said, I really appreciate everything you've done for us. I just need to go home now and take a nap. So we were really working hard for him, really, to understand the marketplace and, frankly, document in a way so that he could syndicate it. This document will go anywhere. And a lot of people actually from the outside are waiting on that document. Other angel groups, they understand that the work that comes out of this crew, at least, is something of value and creates a lot of shortcuts for them, frankly.
Thank you. Well, two iterations of that, if I may, is that I started Keiretsu Forum because of my lack of discipline and expertise as an investor over 20 years ago. I was losing money as an angel investor, and I wanted a community of smarter people like the two individuals sitting here to help won't say guide, but conversely, if you truly, surround yourself, even if you're not a member of Keiretsu Forum, surround yourself with a community of mind share and swarm intelligence. Surround yourself with expertise. I mean, whether you're buying a home, just don't talk to your parents. Talk to many people about the market. Obviously we go, and that's the problem. And I'm not going to, throw anybody on the bus, millennials, but you need to get out of texting and Googling and really talk to people and what they have to say. And that's the whole spirit of Keiretsu. We're here as a community to help each other without a vested interest. So when you make an investment in Keiretsu, 100% flows to the entrepreneur, but we're all here to help each other. Michael?
A couple of things to do with that. The value of the process, and I've realized in the past few days as we've been thinking about sitting to have this conversation, that the value of membership and the value of applying and potentially and hopefully actually becoming a portfolio company is similar. It's the benefit of having gone through and having the process, and it's the benefit of the mind share. We are a community, and compliments to you. I've watched this from when it was 100 of us in a room in the first chapter, and I always was struck by the intelligence of this community, the experience of this community, the diversity of this community, the expression of 6 degrees of separation. Keiretsu Forum is 2 degrees of separation to a C-level executive of a company you want access to. So if somebody goes through this process, which is a hard process, and is a process in which you're not going to get rubber stamped, there's going to be critiques in these reports that come out.
Right.
But if you go through that process as an entrepreneur, it will be valuable because, as Elizabeth said, it's now essentially the Keiretsu good housekeeping stamp of approval. And you now have these contacts of people that can introduce you to companies and potential customers that can develop your business.
I'm going to just add
Sure.
something here from the entrepreneur side, because one of the things I do, like I've interviewed every single Uber driver, Lyft driver, Viagogo driver that I've had, because I want to understand what's happening at the ground level. I've interviewed members of Keiretsu Forum across the country. I vetted probably 15 different angel groups. I judge for the state of New York, upstate capital, and their 43 North program, which was designed to reignite the economy of Buffalo. So, so I've sort of been around the corner. One of the things that's really challenging, and you don't figure it out well, is you really have to manage investors and angel investors. There couldn't be anything closer to a many-headed hydra than dealing with angel investors. The booklet, at least, gives you a process and lets you as an entrepreneur understand what's going to happen. Because as an entrepreneur, you actually do the derby, right? You go to every single pitch event you can, try and get some traction, do multiple follow-ups. You need your own CRM, sort of relationship spreadsheet to keep track of all of this. And you don't know what they're going to ask you. And so you end up repeating yourself over and over again, right? At least when you've got this booklet and you have access to it, you know what they're looking for, right? You have some guidelines that let you enter into a conversation as opposed to basically being a target on a wall for someone to throw darts at until they've decided that they didn't actually like you as much as they thought they did.
This is our thought process. This is the way we think on paper, and this is to be reverse engineered. And by the way, there are 2 PowerPoints at that same link, along with the handbook, that are designed, one for investors, how to maximize use of the process, and one for entrepreneurs, how to maximize use of the process.
My perfect day is learning something every day. And Peter Henry, Keiretsu Forum, North Bay member, termed it Keiretsu Forum as Health Club for the Mind. And so I'm blessed after 20 years never be bored at what I'm doing because I'm learning from smart people like Michael and Elizabeth. But one thing I want to throw out, which I need to do possibly an addendum to the due diligence booklet, is how do we continue our due diligence process when we fund a company? Because I'll tell you, there's a situation right now at Keiretsu Forum. We have great liquid events. I've made 56 investments at Keiretsu. Thanks to Keiretsu Forum members, I'm over 38% IRR because of members, but I've had 8 losses. Let's go back to losses. If in fact, if I had continued due diligence and just having wonderful hope and trust with this entrepreneur, let's just say they got to this level and then I just let them go. Well, you just can't let them go. So how do we continue doing our due diligence, Elizabeth?
So you're getting right at a point that is part of my personal investment criteria. So I had a liquidity event when I sold my firm. It was the second company I'd started to WPP Y&R. At the time, it was the highest multiple for a consulting firm that had happened, and then somebody came after me and got like 150x of their, annual revenue. So we didn't stay on the map very long for that. But initially, the hard part is entrepreneurs are so exciting, right? If you love to learn, they are subject matter experts. You can engage with them, and there's no question that you can't ask that they don't have an answer for. It's a very enlightening moment. But what I learned after writing a lot of those checks, and everybody else who sits in the forum has done that, was that I only invest now in companies that I can run if I had to, and where my Rolodex personally makes an impact on their future. So where I can actually say, okay, wait, we need to go talk to Coca-Cola, we can do that. Like, give me a week and we'll be talking to the CTO or whoever. But only after I know enough about the company, right, and the entrepreneur themselves has demonstrated that they're worthy of that contact. A lot of times you can't just hand off the contact. You've got to go with them and guide them through the process.
Elizabeth, getting back to your Rolodex, or if millennials are listening to this, they don't know what Rolodex is.
Yes, to my network, to my network.
And what I love is if the entrepreneur you're investing in, she or he, will they receive that and say, yes, Elizabeth, take us to Coca-Cola. Where I find sometimes the worst investment to make when you have a stubborn entrepreneur, we love, obviously, great confidence, bravado, but you need to listen to your angel investors. You need to listen to your capital source. So do they always listen to you?
So I
honestly
force them to do something with me that I call, it's the practice of going from their idea to becoming an inevitable part of the marketplace. And there's a process to getting there. Once I've outlined that for them and forced them to fill in the the holes on this sort of mind map, they get it. They're like, oh crap. Like I sat down with one company I've invested in. This young woman is brilliant. I went through my thesis with her, and we got where she is with her business up on the wall in a way that everybody sitting in the room can view it. And I said, so here's the gap. I couldn't put my finger on it, but now that I've got it all up here, here's the gap. You have no sales opportunities that are less than 6 months. Every single thing you're going after is 18 to 24 months. This is a hole. What can we fill in there? And let's at least go test it with a couple companies. And she was all for it because she suddenly understood how she was managing her financials, the people, her resources. She needed to start the wheels turning on a shorter sales cycle in maybe a slightly different market segment, but one that was completely contiguous with what she was going after.
And so she was receptive, and she executed, and she was successful, and you were successful too as an investor?
Well, that company is one that's a long-term hold. In fact, the secondary market would probably buy the shares, but I'm not interested in selling them. It's the game-changing company as far as the ability to test water in real time. It's just extraordinary business.
So, Michael, we're going to turn to you, but one anecdote before I started Keiretsu Forum. I think it's disingenuous and venture capitalist angels always talking about the wins. Well, I had a loss where I remember investing in this company. It was Hollis Street in Emeryville, and I walked in, there was 28 engineers. I said, wait a minute, we gave use of funds, a couple $1 million for you to hire sales and marketing, and they were just so much in love with engineering, they forgot to hire sales and marketing. The company went like this.
That's right.
And so
I can speak to that. So this is a geeky thing to say, Mike. So the fact of the matter is you have an entrepreneur, subject matter expert, right? Usually what happens is the reason they start a company is because all their friends say it's a really good idea. If they happen to be an engineer, most of their friends are engineers.
Exactly.
So they just keep building on it. And what ends up happening, especially if you have investors who come in, the engineer who's the CEO and founder loses his job because he starts to go off a cliff. And he's forced by the investors to hire the dreaded salesperson. And now the salesperson actually goes out and uses his network to advance sales because he knows the market. And then he hires all his friends. And at some point, there's another cliff because they run out of network. So this is where it gets into, if you actually understand the basics of identifying a market and understanding how to address it, that's the sort of thing I'm willing to convey to an entrepreneur. But when they're resisting, the resistance is has to do with lack of information, right?
Right.
So the only way you can give them that information is to put it in a way that they understand.
All right, and we're turning to you,
let me
Michael.
jump
I've
in.
seen 30,000 business plans over the last 20 years, and I'm getting a pit in my stomach about the cliffs. You know, there's many cliffs, just not
Right.
one cliff, but it's fascinating, and they don't see the cliffs than we do. Michael?
Well, there are a couple of things that I want to touch, that I want to highlight that you're touching on. The first is what I'm starting to call qualitative risk from an investor's perspective, which is, and this is where I made my mistakes as an investor and had my lessons and some partnerships as an entrepreneur, is that companies succeed or don't based on two sets of factors: the quantitative, the market, the sales, the business, the technology, the operations, all that, and the qualitative, which is what is it about the entrepreneur and the executive, the human, and the decisions that they are going to make when who they are as a person, and the, forgive me for saying the demons, the humanity of us,
And
comes
protecting
out.
the LPs, protect the shareholders.
Yeah.
See it all the time.
Well-
they start to protect other things, which is debt sources or themselves. Protect your investors.
Understand and try to understand the mindset of the entrepreneur. And that leads into the other thing, which is this: if somebody gets one venture firm to lead around, and that's their investor, their partner, investment partner, is whoever in that fund is assigned to that company. Here, their partner is the entire membership, and there's value to add. So the handbook appendices set an expectation for entrepreneurs. You better expect to be in communication on a regular basis quarterly. If you're not, you're missing the opportunity to use the resource. Where I disagree with you, forgive me, is investing based only on your Rolodex. The point here is the etiquette of the membership in working as a collaborative Keiretsu. Your Rolodex, my Rolodex, everyone's Rolodex. And so we know each other. Now you can come to me and say, I have a company that needs this contact, and vice versa.
Yeah, but you're now part of my Rolodex or my network, Mike. So that's the difference.
So we can help. The
Yeah.
point is, there's so much more than capital here.
Elizabeth?
If you stay in contact with us after we invest.
I think I'm just going to finish a point, though, to yours about watching this particular entrepreneur go off a cliff, or you see him about to. I have a good science background, and so I used to use with engineers the first theorem of calculus. And the first theorem of calculus is that you can infinitely approach zero. So let's say you can infinitely approach perfection. That is what an engineer will do. Instead of moving on to the next set of features, functions, or markets there should be, because over time that perfection will happen as the people who are in the customer service or the product support, right? They've got to keep moving because we're mostly investing in technology, right? We do lots of things. There's a variety of deals that come through the form that actually surprise and delight me. But when you're investing in tech, that at least I know that first cliff, if it's an engineer or someone who is very much the subject matter expert, they're just trying to solve this problem.
Okay. Isn't it amazing? 30 minutes goes by like that. So we had so much fun talking about win-win for the entrepreneur and for the investor on due diligence today. Also, be my guest at Keiretsu Forum wherever we are throughout the world. We have 53 locations. It all started here in Silicon Valley almost 20 years ago. In fact, our celebration party is September 22nd. Thank you so much, Elizabeth and Michael, for coming today. And let's have great due diligence, but let's keep investing in. I mean, what are we doing? We're really trying to make an impact in the marketplace with great companies come to Keiretsu Forum. And we're sharing that knowledge once we invest. And you're going to share your due diligence work with VCs or whomever, because we're here to support entrepreneurs. Thank you so much.
Sure.